Weekly recap. Let's look at some of last week's highlights related to market. Please read the disclaimer carefully before access this video content further. Donald Trump has won the 2024 U.S. presidential election, defeating Democratic candidate Kamala Harris. Trump secured a decisive victory by winning all 7 key battleground states: Arizona, Nevada, Wisconsin, Michigan, Pennsylvania, North Carolina, and Georgia. With Arizona's 11 electoral votes being the final state to be called, Trump's electoral college total has risen to 312, compared to 226 for Vice President Kamala Harris. The Federal Reserve reduced interest rates by 0.25% to a range of 4.5% to 4.75%, aiming to prevent prior rate hikes from overly slowing the economy. All 12 voting members supported the cut, following a previous half-point cut in September. Fed Chair Jerome Powell indicated that the recent election would not affect immediate policy decisions and reaffirmed his intention to serve until his term ends in 2026, despite any hypothetical request for resignation. The Fed faces uncertainty about future rate adjustments, as the incoming administration's policies could impact economic conditions. Bond yields have risen since the September cut, partially due to improving economic data, pushing mortgage rates higher. Market expectations for further cuts have moderated, with projections showing a potential Fed rate of 3.5% by next year if economic expansion and cooling inflation continue. The Fed is pursuing a middle path to balance inflation progress with labor market stability. The S&P 500 crossed 6,000 for the first time ever. This is a significant milestone, as it took only 9 months to reach 6,000 from 5,000. The banking sector and small-cap stocks recorded the largest weekly gains among the selected sectors and subsectors. Additionally, last Friday saw 2 new companies join the Dow Jones Industrial Average, NVIDIA and Sherwin-Williams, both of which were up over 8% for the week. Tesla's stock price saw a remarkable increase, rising by approximately 30% over the course of the week. The stock broke through the $300 level for the first time since 2022, reaching as high as $328 on Friday. As a result of this surge, Tesla's market capitalization surpassed $1 trillion once again. This milestone reaffirms Tesla's position as one of the world's most valuable companies. Donald Trump's return to the White House is expected to benefit Tesla, with analysts predicting lighter EV regulations and potential support for Musk's proposed national standard for self-driving vehicles. Wall Street analysts became increasingly bullish on Tesla. Bank of America raised its price target for Tesla to $350, while Wedbush reiterated its outperform rating. Expectations of higher tariffs on Chinese imports and the potential scrapping of EV subsidies under a Trump administration are seen as advantageous for Tesla compared to its competitors. Musk's close ties to Trump are viewed as potentially beneficial for Tesla, with some analysts suggesting it could help stave off competition. This remarkable week for Tesla's stock reflects growing investor confidence in the company's future prospects, particularly in light of the changing political landscape and its potential implications for the EV industry. The software company reported strong sales and raised its revenue guidance, boosting investor confidence in its growth potential. Palantir, which provides data analytics software to governments and businesses globally, has seen its technology used in conflict zones like Ukraine and the Middle East to support battlefield logistics and military decision-making. This year, the company also secured several significant contracts with the U.S. Department of Defense. Palantir Technologies shares rose 30% over the week. Last week, renewable energy stocks as a subgroup experienced mixed performance, with some notable trends. The renewable energy sector saw both gains and losses among different companies, reflecting a somewhat volatile week for the industry. ENPH down about 20% for the week. Supermicro Computer Incorporated, SMCI, stock has been experiencing a significant decline recently due to several factors. A major catalyst for the stock's decline was a report by short seller Hindenburg Research, which accused SMCI of accounting irregularities. These factors have significantly eroded investor confidence in the company's financial reporting and governance. While SMCI faces significant headwinds, it's worth noting that the company still has some positive factors, including strong revenue growth in recent quarters, ongoing demand for AI-related server solutions, and partnership with NVIDIA, a leader in AI chip technology. However, the market appears to be focusing on the near-term risks and uncertainties surrounding the company, leading to continued downward pressure on the stock price. Thank you for watching this video. If you like the content, please subscribe this channel by clicking the subscribe button for this channel for any future updates.